Hi, Michael Lapidus of Goldman Sachs. I have two questions, one for Stephen and Jim, and then one for you, Marv, and they're a little bit unrelated, and I apologize. The first question is, we're starting economically, we have been over the last 3 to 5 months, seeing the first signs, hints of broader inflationary trends. Food prices globally are way up. Interest rates are, the 10-year Treasury is up 100 bips in the last 6 to 8 months. How do you think about, from both the company perspective and also the ratepayer perspective, of protecting yourself from an extended period of potentially high interest rates, maybe not in the next 1 to 2 years, but over the next 3 to 7, as you think about a multi-year construction cycle? That's the first question. And the second question, Marv, is really federal progress in terms of new nuclear development seems to be kind of continuing, but we have Vermont and Governor Shumlin in the dealings with Vermont Yankee. We have the Oyster Creek announcement that happened a couple of months ago. We're sitting here in New York, and 18 miles, 19 miles away, we're having active discussions about what happens to Indian Point. Are we seeing a battle, kind of a running to stand still battle, where federal government is moving in one direction and potentially some of the state governments are moving in others, and then you have the specter of 316B coming as well, which obviously has a bigger impact on the coal fleet, but it impacts nuclear as well. Just kind of curious the broader implications of what's happening in the states and what's happening with water regulation and the impact on nuclear. So maybe the inflation one first and the state level one second.
Why don't I talk about the southern situation first on inflation. Recall that we are the first in line to get a loan guarantee, $8.3 billion for the project, loosely half of that for Georgia Power Company. That operates as a great hedge in a capital-intensive business such as ours. So that's very helpful. Inflation is a fact of life. It is coming, so in our contractual relationship with a number of our vendors, we try to hedge against that also. And Southern, being very stable, having an excellent balance sheet, still has the opportunity to protect itself when it goes to the markets to borrow short or longer term money. So we feel like we're in a good situation. But to your point, most people here can remember not that many years ago when interest rates were in 12, 15, 18. None of us want that to happen, and it'll impact any business. It's not isolated to us. With the Southern story, we feel comfortable we've got it in a manageable realm.
Me too. What Jim said is accurate. One of the best hedges on inflation is to build during a time frame when inflation is low. So we've got a head start, if you will, of a couple of years on that inflationary period, which we knew was going to be coming. We knew that the current prospect for low inflation wouldn't last forever. We've built up probably $500 million in headroom so far because the indices are coming back lower than we had anticipated. But with our Baseload Review Act, inflation is going to be what inflation is. We can put together projections, but it is going to be what it is. So from the utility perspective, we are covered from that respect by that Baseload Review Act. Jim talked about financing. We've done roughly 5 debt offerings and I think 2 equity offerings since we signed our contract. So everybody knew what they were for. All of those have been at very reasonable rates, some of them very long term, and all of them oversubscribed. I think the last one was a first mortgage bond offering, which was about 8 times oversubscribed. So what we're seeing is there's an appetite for the product that we're selling currently. So the Handy-Whitman Index, along with the Baseload Review Act protections, coupled with the fact that we believe that we're able to finance and have locked in a good portion of that financing so far, have gone a long way. But remember also that our contract has about 2/3 of the expenditures in either a fixed or a firm category, which means that they're tied to either zero inflation or known inflation factors or a fixed inflation factor. okay? Now, I can't get into exactly what those inflation factors are, but it'll be a known percentage that doesn't change through the life of the project. So in negotiating the contract, I think we took a great hedge against inflation.
Thanks, Steve. I'm going to answer this question, and we'll take one more, and we'll let you all get out of here. Let me answer it in reverse order of the way you asked it. Let me start with 316B. 316B, for those who don't know, is a provision in the Clean Water Act that requires you to use best available control technology for your intake structures. It's not unique to nuclear plants. It applies to any power plant, chemical plant, refinery that happens to take a lot of water in from any body of water for cooling purposes or whatever. We understand through a lot of discussions with Lisa Jackson and her people at the EPA that they understand that looking at 316B in a rational way where it's a case-by-case determination and you do cost-benefit analysis is the right way to go about it. The rule itself is going to be out for public comment, I think, on March 14th or something like that, and we'll actually see whether or not the feedback that we've been getting directly and indirectly is reflected in the words in the rule itself. There's an awful lot of congressional interest in making sure that this comes out right. We're talking about facilities that have been operating for 20 or 30 years in many cases, and if there's been a measurable impact on the aquatic life, you know that you can entrain fish, you can impinge fish and entrain larvae in an intake structure. That doesn't mean you're hurting the population. Okay, so the issue is, do you do a realistic cost-benefit analysis, and do you do it on a case-by-case basis? EPRI just did a evaluation of just the power sector, and their estimate is that if you had to comply with 316B by putting cooling towers on, it's about $95 billion. Okay, and the implications are much beyond that. You have all kinds of environmental impacts from cooling towers. So I think on 316B, I think we see the trend going right. We'll know in about another 6 weeks whether the words and the actions are congruent. But I think that there's an awful lot of political as well as support within the administration for making sure that one comes out right. I think to your question about Oyster Creek, VY, and Indian Point, clearly the states are a very important place, and we actually at NEI are putting more emphasis on supporting our companies in the states. And some of that is educational. I think that you'll see business decisions, whether we're talking a business decision to go forward with a new plant or a business decision to keep operating an existing plant. There'll be a business decision. I don't know the number, but I think it's probably about 60 or 70 coal plants were either canceled or announced to be shut down in the last 2 or 3 years. So companies are making decisions based upon, for coal, environmental requirements probably, and other things. And I think for us on nuclear plants, I think Exelon has explained their decision on Oyster. It sounds like a pretty rational thing. I'm not sure it's great for the state of New Jersey, but I think from their standpoint, I love Vermont as a place to visit, but I wouldn't want to live there. So I think having that plant operate in Vermont has been a great asset to them. Indian Point, I lived in New York for years, and Indian Point basically is a major supplier of electricity to this city. It keeps actually the subways running as well as other things. So I think there can be a lot of talk on Indian Point, but unless somebody realistically looks at what you do, and when you look at how well the plants are operating, I mean, even Vermont Yankee has been a good operating plant. They've had things go wrong with tritium leaks, which never represented a health and safety issue. But from an operational standpoint, it's been a pretty good operating plant, and Indian Point has certainly been a good operating plant. So I think what you're going to see is business decisions that make sense to the companies, whether it's for a nuclear plant or it's for any other generating facilities. And I think that they'll be responsible in the way they do it. And I think what we need to do is make sure that whether it's a 316B issue or it's a tritium issue someplace, we do a better job at educating state officials and local communities about the real implications, the real seriousness, whether there's risk or whatever. And I think we're trying to do more of that working with the companies. But I think you'll see these kinds of decisions come up. Okay, we'll take one more if there is one more. I can't see. Call.
Steve, could you tell us where you guys stand as far as loan guarantee is concerned? indicated in the past, or the company has indicated in the past, some ambivalence about the whole process, whether or not you really want a loan guarantee. I wonder if that's still a matter.
Yeah, I think that's still the status. We continue to believe that we don't need loan guarantees to finance this project. Everything we've done, either in debt or equity offerings over the last couple of years, have reinforced that for us. So our position is that if the loan guarantees are in the best interest of our customers, our shareholders, and our company, we will pursue them, and if they're not, then we won't.
And you'll know that, what, when OMB tells you what it's gonna cost?
Yeah, I think we're likely to work with the Department of Energy first, and probably OMB secondly. We'll probably know that sometime mid-part of this year.
Okay, I'd like to thank all of you for coming. Go on our website if you're looking for other information. Call me, call Richard, call Leslie if we can help you in any way. And it's always a pleasure coming up here. And again, thanks for spending the morning with us, and thanks for your questions and your attention. Have a really good day.